Greetings, members one and all of the Salivation Nation. I'm all excited. Oh, yes, I'm very excited because this could cause silver prices to climb to $20 an ounce. Let's explore. Yes, actually, that was feign excitement. That's right. It was just a pretend. It was an act. I'm really not all that excited because I doubt it's going to happen. But there is a catalyst that could push silver to $20 an ounce. And we're going to look at that according to this article here and take a look at the counter argument to it as well. And my first beef with this argument is the term investment. Now they're saying here Metal's focus is saying that investment inflows into silver are likely to continue, and that means that we're going to hit $20 an ounce soon. And I'm very, very cautious. Although I've made the prediction that we'll see $20 silver by the end of the year, but the way things are kind of moving around in the markets, it could really go either way here. But Metal's focus looks for silver prices to climb above $20 an ounce later this year on continuing investment demand. Now, what is investment demand? Well, essentially, that's a fancy word for saying that it's a physical demand in the actual realms of or not necessarily investment, but just in overall demand for people looking to hedge with silver. And, that can be in the forms of physical or exchange traded products already hitting a high. And this is kind of what it's geared more towards. In other words, people buying ETFs. But the metal has staged what the consultancy calls a remarkable recovery, regaining $18 an ounce several times this month after falling to a multi-year low of $11.64 in March. Now, that low is not reflected in the actual markets when you bought it in the physical form. And I think that is really what's going to take the cake and the key here. He says, although the rally has since run out of steam, silver has been holding up above $17 recently, a level still notably higher than that seen over much of 2018 and 19. And that's true, but we are in unprecedented times. And for most of us out there, we think it should be a lot more than that. My feeling is it should be well into the 20s by now, but it's not. And it's being held back, which is why the feigned excitement that you witnessed at the beginning of this video. Analysts noted that another COVID-19 outbreak is occurring in Beijing, which can disrupt markets. Nevertheless, analysts said they have a fairly optimistic outlook that the world will be able to handle further waves of the infection and a stimulus-driven economic recovery will occur. Again, this backdrop, we believe investment inflows into silver are likely to continue, Metals Focus said. Key to this will be the exceptionally low policy rates and unprecedented liquidity injections by central banks, which will ensure a minimal opportunity cost of carrying gold and silver. A slowing global economy should also ultimately encourage a further rotation from stocks and bonds into defensive assets, in other words, hedges. But, and the thing is you can use the ETFs as an investment vehicle if you'd like, because essentially that's what it is. These are stocks, essentially, exchange traded products, ETFs. You buy them and then you can make money on them for the dollar. But really, the reality is silver in and of itself is a hedge. It is a vehicle that is utilized as a safe haven asset, or at least it has been in the past. But if you want to invest in it as a commodity, that's kind of where you do it, is in the stock market and exchange traded products that are out there. But for most of us, we do it as a hedge. And I believe that really what's going to cause the price of the metal to go up is actual physical demand, or the physical in the form of coins, rounds, and bars. That's right. That's kind of what we're seeing here. So, So the metals focused consultants say that against that backdrop, they believe investment inflows of silver are likely to continue. Key to this will be exceptionally low policy rates and on the other things that we talked about before, but also once gold eventually breaks out to challenge an all-time high, silver should reassert its ability to outperform gold, with the white metal expected to surpass the $20 mark in late 2020. So a relatively tame prediction for what they perceived as to be that silver will reassert its ability to outperform gold. In other words, not that it will outperform gold, but the potential for it to be there. So there's a relatively tame prediction, with all things considered, of where gold has been vastly outperforming silver, with right around that 100 to 1 mark, gold to silver ratio. As of 10:10 a.m. Eastern Time, spot silver was up 9 cents for the day at $17.50 an ounce. The gold-silver ratio, which measures how many ounces of silver it takes to buy an ounce of gold, was around 98.5. Retail investment has burst into life as silver, like gold and other markets, recovered after initial sell-off during a rush into cash back in March, Metals Focus said. At the time, equities were in a free fall in response to worries about the economic fallout from the COVID-19 pandemic. Silver's strong recent comeback has been assisted by strong gold prices, that's for sure. Silver's been riding gold's coattails during this time, and that's all we can say about it. As the gold-silver ratio hit a series of all-time highs during March, this made silver appear increasingly undervalued, especially for many retail investors who often see falling prices as an opportunity to buy the metal. Despite a sharp fall since April, at around 100 at the time of the writing, the ratio remains elevated by historic standards. In particular, demand for exchange-traded products has been strong, Metals Focus said. As the consultancy's report, analysts said global ETP, that's exchange-traded products, holdings were set at a record high of 896.4 million ounces. They had risen 167.5 million for the year to date, already surpassing the highest ever annual inflow of 149 million ounces from 2009. ETP's low cost and easy access also raised its investment appeal, especially at a time when retail sales of bars and coins in the U.S. were affected by supply chain disruptions, Metals Focus said. Bar and coin sales did burst into life in response to the March price correction and a deteriorating economic outlook. This saw dealer stock for several investment products quickly become depleted, resulting in extended delivery lead times and far higher premiums. And there's where the attraction is to the ETPs. The ETFs are out there for people to take. In fact, some in this community have shifted their focus to that as a way to kind of get into the metal because of these high premiums. Further speculative interest among futures traders picked up, Metals Focus said. Still, analysts continued, not all is rosy for silver. With industrial fabrication demand hurt by the COVID-19 pandemic, at least there are indications of a pickup in this consumption, however. After a sharp contraction in March through April, silver industrial demand has shown signs of improvement from May onwards. After many key economies gradually lifted lockdown measures, Metals Focus said. However, poor consumer confidence and a sharp rise in unemployment have continued to weigh on demand in many end-user applications such as automobiles, consumer electronics. In the photovoltaic sector, as the pandemic spread to more emerging countries leading to worsening economic conditions, this may put further pressure on the industry, which had already faced project delays. Jewelry and silverware have also suffered losses as a result of lower visitors to retail stores and the appetite for discretionary spending taking a hit. That's good. I'm glad they mentioned those factors too, because you have the push and pull of the industrial sector versus the investment sector or the hedging sector. And silver, like it or not, is being seen more and more by the markets as an industrialized metal. It has a dual nature, as you know, and it seems like in times where the prices take a hit, especially during that sell-off in March, well, that is what we're seeing here. So on the counter to that, to further take this here, FX Street shows here that silver could be heading lower after breaking the channel on the daily chart. Although silver is trading higher on Tuesday, the price broke below an important channel on Monday. The price then quickly moved back up after hitting $17 per troy ounce and support for 200 simple moving average. The price is to move lower from here, then it would need to break the 255 moving averages to get the green support level at $16.53 per troy ounce. The price also looks like it is forming a topping pattern with the waves making a lower high lower lower pattern. This is a technical analysis here. The relative strength index indicator has moved away from the overbought zone and looks to be headed towards the 50 midline. So, that's where things are. And, my eyes kind of gloss over at this technical analysis here. But, this is as a bearish cross and pointing lower, which adds to the bearish theory. Who knows, really, in this things, because the technical analysis doesn't take into account the emotional and the geopolitics that can come into play that completely wipes out all of these theories that are tied to it. But, the thing is, where it will go, or where it could go, one way or the other, for sure. Keep in mind, I will make note, because I'm sure some people will comment on this in the comment section. So I hope they watch to this point of the video for me to make this assertion that, yes, people are screaming, silver's not reached $20 an ounce, but it's there already in the physical markets. Good luck finding an ounce of silver for less than $20 an ounce. In fact, I got getting emails from a bullion dealer saying, we got low prices on the silver now. $3.95, $3.75 over spot. That's considered a steal these days. That's over $20, and that's the low right now. There's still high premiums out there. And what can you sell the silver for? Well, arguably, many dealers will probably pay you close to $20 an ounce. Just depends on what it is. But even as such, you obviously are going to take a lot less when it comes time to sell than you would to buy, for sure. But most places are paying somewhat above spot. But in order for you to get the metal, you're paying above $20. Even as such, still, silver should be a lot higher based off of past performance. In this particular time, I believe, even though we're at the beginning of this thing, I think enough is digested. We're 3 months into the shutdowns, and so the economy is what it is now, and I believe that the prices should have started climbing even higher than they are now. It's a somewhat impressive turnaround from $11 and some odd cents. However, it's still undervalued compared to where it should be, and that gold to silver ratio should be a lot tighter than it is, and it's not. But by and large, patience is the key when it comes to silver, and I believe that, which is why a lot of people, are being somewhat discouraged by silver, and it's understandable. I would never encourage you to sell at a time like this, but I would encourage you to diversify and get some gold, because I think there's better protections with gold. It is the ultimate safe haven. It is money. Central banks hold it, and even if you can afford to squeeze out a quarter ounce here and there, I think it's wise to do so. So there you go. Post your thoughts below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate and share and comment and then subscribe.